In this video, I'm going to explain exactly what a currency pair is and what it is that makes these markets go up and down. Hello, I'm David Jones. This is my latest jargon-busting trading terms video with Trading 212. I thought this week we go right back to basics. When we look at markets, plenty of us will look at currencies, the various currency pairs, see what's moving, see where the opportunities might be. But I think for plenty of people who are new to this, there can still be an element of confusion as to what exactly a currency pair is. What do these numbers mean? So I thought this week let's just clear up any misconceptions or misunderstandings that people have about currency pairs. If you've been doing this for just a few weeks, you'll know what it is. Pound US dollar is the exchange rate between the pound and the US dollar. But let's go right back to the basics. What do these rates mean? And when we're looking at them, how can they actually move around and what influences them? Let's take a look first of all at what exchange rates actually are. So let's start right from the absolute basics. So what is a currency? What's a foreign exchange pair? Here we go. This is pound US dollar. So it's the exchange rate of the pound versus the US dollar. The example I'm using here, the example rate I'm using is 1.38. The easiest way of explaining this is how much of the second currency would one of the first currency buy. So in this example, what it means is £1 will buy you, at the current rate, $1.38. Okay, so it's as straightforward as that. And of course, if the pound strengthens, let's say the market moves to 1.4000, then it just means that £1 now buys us a little bit more. It will buy us $1.40. Just to make sure this all makes sense, one more example. Euro against the British pound. So again, how much does one of these buy of the second currency? So in this example, €1, if you're coming over from Paris to London for the weekend, will buy you 0.88 of a pound. So obviously 88 pence in this example. You could quote it the other way. I mean, we could have a look at sterling euro. Let's bring up the exchange rate for that. So it's simply that exchange rate turned on its head. So it's 1 over that exchange rate. So sterling euro, £1 will buy you €1 13, just over €1 13 and a half. Okay, but there's a market convention way of quoting this stuff. So whilst you could say US dollar, pound, sterling, euro, the typical conventional way of quoting it is pound, US dollar, or euro sterling in this example. But it's all about how much of the second currency does one of the first currency buy. So there we go. The easiest way of explaining it is how much of the second currency does the first currency buy. That's it. That is an exchange rate. And if the market's more optimistic about the outlook for the first currency, then it will go up in price. But to see these moves on a chart, so to look at some real markets, let's take a look at the trading platform, at some of the moves that we've seen in, for example, the pound US dollar. Let's take a look at the charts. Here's a simple line chart in the real world, pound US dollar. So this is going back to about March 2017. So you can see back then, a pound would buy you around about 124, so 1.2400. So a pound would buy you $1.24. At the moment, at the time of recording, we're up here. So the pound has strengthened. So what we're seeing here, the pound gaining ground against the dollar. Another way of saying it is we've seen dollar weakness, but as it's pound US dollar, the chart is going up. So now a pound buys you about 1.38, so $1.38. So it's a move in excess of 10%, really. The pound has strengthened by just over 10%, going from 124 to 138 in the past 10 months versus the US dollar. And of course, we're looking at a longer term chart here, but we'll see plenty of changes throughout the day. These markets do tend to be, as I'm sure you're aware, pretty active markets. And just another quick one to show how political events really can affect currency markets, because they are so tied to the country's economy and its political stability. Back here, this is the vote, of course, the famous vote for the UK to leave the European Union. The expectation was the UK population were going to vote to stay in, It ended up being something of a shock when we voted, the UK voted to leave and start the Brexit process. So you can see the night before, a pound would buy you $1.48, so $1.48. The very next day, because of the volatility, or over the next couple of days, it would only buy you $1.32. So we saw a drop, again, of more than 10%, but this time it took almost a matter of hours to play out. So that shows how extreme political uncertainty or political shocks can really affect a country's currency. So when it comes to what drives currency markets, there's a whole host of things. Clearly the economic health of that particular area, for example, the pound against the Japanese yen, will be one factor. Interest rates come out to play. As we've seen, political decisions, like the Brexit decision from June 2016 had a massive impact. What central banks are thinking about doing with interest rates, again, can cause volatility in currency markets. But hopefully, if you're a little bit confused and you've never looked at these markets before, that's cleared up, hopefully, any misunderstandings or confusion you had about how exchange rates work. We'll start wrapping things up there for this week. If you've got any questions or you're still not sure, leave us a message in the comments down below. We do read all of them. If you like the video, click on the thumbs up. And if it's the first one of these you've seen, we do a whole host of different videos throughout the week on various markets like oil, cryptocurrencies, technical analysis techniques, all this sort of stuff. So if you're not subscribed, if you click on the subscribe button there, you'll get subscribed. And just make sure you've clicked the alarm bell notification thing down there. That way you'll get notified automatically every time we upload a new video. But for this week, from me, David Jones and Trading 212, we'll leave it there. And I hope you have a good trading week.